Oil continues to sink in price. Is Wall Street's optimism justified, or are we just being fooled?
On a day like today, you need to hear from our Bulls and Bears. We got Bob O'Brien for you, Peter Schiff, Pat Dorsey, and Gary Kaltbaum. Peter, on a day like today, does it make you cry? I mean, you're all invested in gold. Gold is down about $20 an ounce. Stocks are way up, particularly the financials, which you said we're never going to gain any footing. What's happening?
Well, they're not really getting any footing. This is quicksand.
No footing? Did you see Wells Fargo? 32%? Are you kidding?
It's short covering. I mean, it caught the shorts by surprise. The financials are still going a lot lower. They're going to be going lower for years. I don't care if they had a good quarter. The next several years are going to be a disaster for Wells Fargo. Anybody with exposure to the American consumer, whether because they borrowed to buy homes, or because they have credit card debt, or they borrowed for cars, they're going to lose a lot of money. This is a typical bear market rally. How many days have we seen these spectacular head fakes? And yet, fast forward a few weeks or a few days, we're on new lows. This is nothing different. It's an opportunity to sell.
Bob O'Brien, it's hard to disagree with Peter at a time when you see Freddie Mac, Washington Mutual, E-Trade, trading at levels of what the price of a gallon of gasoline is, or, a gallon of milk is. Holy cow. But, we're getting some good tech names coming out soon. We've got Google, IBM, Microsoft reporting. Intel's, margins hanging in there. What do you think?
Well, as Peter mentioned, these bull market rallies, these bear market rallies can be vicious. You get a short spike, and it comes right back. And as you point out, Liz, you look at these stocks, you look at the airlines, $5. It doesn't take much to move this along. I think fundamentally, though, the one encouraging thing I've seen this week, the volatility index, the VIX, finally got above 30 yesterday, and as soon as that was the first time since March, and as soon as we hit that 30 threshold yesterday, the market did one of these and came right back up.
Right. They did
and even though it sold off late, it
well, and Gary Kaltbaum, it's hard to keep a lot of these stocks. Meredith Whitney had a bad reporting on Wachovia yesterday. Wachovia was up with the rest of Citibank was way up today. So is now the time to go into financials?
I think you have a trading rally in the financial stocks, but you have to keep it all perspective. I got to tell you, I was scanning these stocks today, and I noticed Bank America up 15, 18%, and then I looked as of May 2nd, it was down 55% from that day to then. So you've got to realize these things have been trashed. It is normal to bounce. For me, there's one little, two words, follow up. Give me some follow up to tell me the big boys are going after. Let me give you one note. Volume was not heavy today. On a big day like today, you want to see monstrous volume indicating the big boys are buying. They were not at it. Reminds me of a lot of short covering.
Right. Pat Dorsey, all holy hell broke loose when Lehman Brothers came out and said Fannie Freddie, $75 billion losses, new accounting rules. We have J.P. Morgan Chase, Merrill Lynch, Citigroup coming out with earnings this week. You think we can have a two-day rally, which the market is looking for?
Well, expectations are pretty darn low for most of these companies, so I wouldn't be surprised to see the numbers come in and, make the street a little happy with them. I think, though, that that notion that this is not the beginning of a new bull market and more of a shorter-term rally does hold a lot of water, simply because, what we've had so far is really just a financial crisis. It's just starting to seep into the broader economy and really start to take a toll on corporate earnings. And what that means is having sort of a V-shaped recovery in corporate earnings overall. It's hard to make the case for that.
Right. Thank you, Pat Dorsey. Well, Fed Chairman Ben Bernanke. Who would have thought? Congress debating solutions to a Freddie and Fannie rescue plan. But would bankruptcy be a less expensive alternative for taxpayers in the long run?
Yeah, just say the whole thing doesn't work and sell off the pieces of it. Let's ask our Bulls and Bears panel. Pat Dorsey, first to you. We know how important Fannie and Freddie is. They touch... according to Hank Paulson, they touch 70% of all the mortgages in America. But would the best thing be for them to go into receivership, sell off the healthy parts, and just have the government pay off the unhealthy parts?
Well, it depends on what you mean by bankruptcy or receivership. If what you mean is simply nationalize them, and thus, common shareholders get wiped out, but they continue to function.
Nationalize or privatize. The question is, which would it actually be?
If you're talking about actually, letting them go under, if the housing crisis worsens, that would be infinitely more expensive for us as a whole than the Treasury backstopping them. Because our mortgage system would simply cease to function.
Really? Wait, hang on. Peter Schiff, do you really think our mortgage system would really cease to function if you put Fannie Mae and Freddie Mac in receivership, restrained their portfolios and broke them up?
it would change dramatically for the better. In the long run, of course, a short run would be problematic. But, you know, I've been forecasting the bankruptcy of these two companies for years. It would be much better to let them fail. I don't want the government to nationalize it. I don't want the government to have anything to do with mortgages or housing. What would happen?
They already do.
But get them out of it.
How?
They never should have been there.
How?
You know, these two agencies were put in place theoretically to make housing more affordable. Instead, they did the opposite. By encouraging too much credit and too much easy money going into housing, they enabled housing prices to be bid up. So now you have a lot of Americans who own homes, but they've bankrupted themselves in the process. They have huge mortgages. What would happen if Fannie and Freddie were out of the picture? And Americans had to go to banks and borrow money to buy houses. Given our limited supply of savings, interest rates would be very high. And home prices would be very low. And so people could buy houses because even though they would pay higher interest payments, they would have very low prices. And people wouldn't have to go into debt up their eyeballs to buy a house. In the short run, there'd be problems. Down payments would go up.
One of the problems that we've had in this whole market is the fact there's been much too much distance between the borrowers and the lenders. As soon as somebody borrows money, that mortgage is sent off and split up into a million pieces sent around the world. Maybe what Peter suggested, or at least a piece of it, trying to eliminate the middleman as much as possible and get the lender and the borrower in closer contact wouldn't be so bad.
I have a simple solution. Call Jason from the movie Friday the 13th. Get the chainsaw, cut them all up, and get all the good parts of it. Look, Fannie Mae and Freddie Mac, when they were started, they did good. But they are now failures. Mismanagement, fraud, no oversight, this OFHEO, I don't know what the heck they're doing. You got to start this thing over. I don't mind getting rid of them. They haven't helped in the first place. Nothing good has been happening over the last 2 years, and they've destroyed shareholder wealth also, and I don't want to see them out there anymore.
You know, Bob, they had a fiduciary responsibility.
Yeah.
They do not deserve a government bailout. You know, they wouldn't buy or back a mortgage for 2.5%. That's what they're going to get from the Federal Reserve if they open the discount window. They allow this Hindenburg size of a bubble to blow up right under their noses. Do you think we should break them up? And Peter, I think, is right. Just put some rationality into the system.
There's probably alternatives to the current system that would work a lot more functionally than what we've got. But bottom line, you can't change the game in the middle of a disaster. Basically, there was a government implicit endorsement that the government would be there to backstop these things. You got to live up to that. You cannot pull. You cannot pull that out.
This is the time to say there is no guarantee.
But the dislocation you're talking about would be so disruptive that it could crater the entire economy.
But the economy is going to crater anyway, and now we're going to do it with massive inflation. Let's get it out of the way. Let's let the public know that the government doesn't stand behind it.
Look, all I heard when AMBAC and MBI, when they were going by the wayside and their ratings were going to get shot, that whole industry would go bye-bye. Guess what? Warren Buffett came in, opened up a business, and filled the void. Yeah. I guarantee you, where there's money to make and where there's good things to be done, people are going to come, private industry will come and fill the void over time.
First word and last word to Pat Dorsey. You got 20 seconds, Pat. Go ahead.
The question of how we got here and the question of what we do now are different ones. They are not today what they started out being. They've done bad. But where we are today, destroying them right now, as Bob pointed out, would be immensely painful and unnecessary.
All right, last word.
Painful but necessary.
You had to throw that in, didn't you? From gas to groceries, consumer prices continue to...
Well, we ran out our show today with what you need to know. Peter, Gary, Pat, Bob, what do we need to know?
Ford earnings out tomorrow. Now, Alan Mulally has managed to grow earnings every quarter for more than a year here. My betting is that parade stops tomorrow.
You may well be right. Peter, what do we need to know?
Well, you know, Ben Bernanke told Ron Paul today that the Fed can't create oil. That's right, but it creates money. It creates a lot of money. That's why the price of oil is going up. And now you've got Ben Paulson, who's got this bazooka, right, that he's probably going to pull from his pocket and blow the dollar to smithereens. This Fannie Mae and Freddie Mac bailout is pure inflation.
Go?
The dollar goes through the floor. Get ready for double-digit inflation, and the first digit is not going to be 1.
Yikety yikes. Pat Dorsey, what do you got?
Well, John Chambers shocked the market a little earlier this week with some downbeat comments about Cisco's prospects going forward. The man is a master sandbagger. He is always lowering expectations. And at this point, Cisco trades for 14 times earnings, and they are taking share from everybody and anybody. This thing is clearly worth buying here.
Wow. Okay, Gary K., what do we need to know?
I know there's some bad short sellers out there, but this witch hunt against short sellers is a bunch of monkey caca at this point in time. Bear Stearns went out of business for mismanagement, and everything you're seeing is to take the focus off the blame, and that's the regulators, the Fed, and everybody who watched all this happen and did nothing about it. The short sellers are not to be blamed.
So this is the Fed blaming the private sector for stuff that the Feds did wrong. Is that right?
Absolutely. And on the long side, the rumors are 1,000 times worse than on the short side. I remember when all the private equity buyouts were going on, there were 10 rumors a day lifting this stock and that stock to the moon. That never occurred. Nobody complained then.
So, Bob, 2 seconds. Who's going to win on this? Hank Paulson, who wants to bail out these companies, or the folks who don't? Quickly.
Hank Paulson does. He's got the big bully pulpit.
All right. Time to get happy. Happy Hour is next with your host, Rebecca Gomez and Eric Bowling, live from the Bull and Bear Bar in Manhattan.